Good afternoon. This is Campbell McCreary. I'm a Vice President of Capital Markets at Amvest Capital here in New York. Welcome to the Amvest Capital Inc. live webinar with Trilogy Metals. Trilogy trades on the TSX and the NYSE American. We hope you'll enjoy today's program. We'll also be available in replay mode. Feel free to chat in your questions in the question pane of the GoToWebinar control panel or simply email them in, and we'll ask the questions in real time. Amvest is a New York-based specialist investment management and corporate finance firm focused solely on the natural resources sector. Please note this call is from informational purposes only. We have with us today Tony Giardini, making you presenter. Tony, if you want to turn on your webcam. Is the president and CEO of Trilogy, and was the president of Ivanhoe Mines from May 2019 to March 2020, and was executive VP and CFO of Kinross from 2012 to 2019. He was CFO of Ivanhoe from 2006 to 2012. Prior to joining Ivanhoe, he spent more than 10 years with Placer Dome as vice president and treasurer. Following the formal presentation, members of Amvest Capital ask questions of management, and we hope that you will send in your questions as well in the question pane of the GoToWebinar control panel. And the on-demand replay of this event will be available about an hour after we close, and you can find it at amvestcapital.com/webinars. Hi, Tony.
How you doing, Campbell?
All right, we can see and hear you. You give us the update and present the story. Thank you.
I will do that. Thank you very much. And thanks to Amvest Capital for having us. Look forward to going through our presentation and leaving plenty of time for questions. So maybe Campbell did a good job of introducing the company, but I'll give you a bit more color. As Campbell said, we're listed on the New York and Toronto Stock Exchange under the ticker symbol TMQ. A copy of this presentation and other information on the company is located at our website, trilogymetals.com. I encourage you to go and have a look at the website. What we're talking about today is our development project in the great state of Alaska, and the metals that are shown on the front screen, the front page of the presentation, are the metals that we're focused on, primarily copper, zinc, lead, gold, and silver as it pertains to the Arctic deposit. And I'll talk a little bit about our exploration project, Bornite, which is a cobalt copper deposit. So with that, let me get started, and I'll take you through the presentation. As I said, leave hopefully plenty of time for questions. Just to highlight that I will be making forward-looking statements, and we have our disclosures here associated with those forward-looking statements. So let me tell you a little bit about Trilogy and the Ambler Mining District. So Trilogy owns a 50% interest in the Ambler Mining District. Up until 2020, beginning of 2020, we actually owned 100% of that district, but we entered into a joint venture with South32, which is a large Australian-based mining company, for them to acquire 50% interest in the district in exchange for them contributing $145 million into a newly formed JV. So what we did at the beginning of last year was we formed a JV. Trilogy contributed the Ambler Mining District into the JV. South32 contributed $145 million in cash. And I'll talk a little bit about what we're going to be using that cash for and how far it takes us in terms of the next steps. With respect to the district itself, it has large copper resources. You can see over 8 billion pounds, zinc, gold, and silver. We're located in Alaska. There's a significant upside potential with respect to exploration, and I'll talk about that. It's a high-grade copper deposit. So if you look at Arctic as an example, which is our project that we have a feasibility study on, the vast development project, its average grade on a copper equivalent basis is about 4.2%. So when you look at copper projects out there right now, a lot of the copper projects without other metal credits are about half of 1%. So this is roughly 8 times the grade of some of the other projects out there, and that's what makes it so appealing. And what I'll be talking about is our partnership with South32 and two of our other significant partnerships, one with NANA and the other one with ADA, which is a development agency in the state of Alaska. The two projects that I am going to focus on are Arctic, which is our advanced development asset with a feasibility study out that was prepared by Trilogy, an MPV of $1.1 billion based on base case prices, but I'll give you an indication of what it looks like in the current robust copper market. And then Bornite, which is a development asset. In terms of share capitalization and the balance sheet, we're in great shape. We've got $11 million of cash at the corporate level, no debt. But in addition, as I mentioned, there's $140 million now of that original $145 million that's remaining in the JV. So our see-through look at of that cash is $70 million. So in aggregate, when you look at the market cap for Trilogy, is approximately $81 million of actual cash and liquidity that forms part of that $370 million market cap. We have a great shareholder base, accounting for roughly 63% of the entire shares outstanding. Electrum has been there since the company was spun out, as was both Baupost and Paulson. South32, which is our partner in the JV, Ambler Metals, also owns 11% of the stock directly. Speak a little bit more about that. And management owns about 2% of the stock. I acquired 200,000 additional shares in November when we saw a block trade. So management is very focused on the upside development of the district, and we're incentivized to obviously continue to see the development move forward. I mentioned three partnerships, South32, NANA, which is a native corporation in the state of Alaska, and then the state of Alaska itself through ADA, which is its development agency. So let's start with South32. South32 exercised its option to form a JV in January of last year. They contributed $145 million into the JV to get a 50% interest. South32 is Australian-based, $9 billion market cap. They made a large acquisition in the US a couple of years ago when they purchased Arizona Mining. And in fact, the president and CEO of Arizona Mining is on the Trilogy board, Jim Gowans. So with that $145 million in the JV has funding for the next 4, possibly 5 years of development in terms of moving the project forward. Earlier this year, we had announced a budget of $27 million for increased exploration and development activities associated with the next phase of studies in the Ambler Mining District, and I'll speak to that in more detail. So we're well funded and in a great position to be able to move the project forward. Our contribution to the JV was this total land package of 172,000 hectares. And you can see there's different color components on the slide. The top red area were the original Kennecott claims that were explored in the 1960s. The green area were contributed by NANA, and I'll speak about the role that NANA plays in the mix. And blue basically describes the total area of interest. And what's so exciting about what we have in Alaska is that it's not about one asset, Arctic or Bornite for that matter. It's about the potential within the district, which has had some exploration, but there's significant exploration potential still looking in terms of looking for additional discoveries, of which we think there will be many. Our second partnership is with NANA, and NANA contributed, as I showed on this slide, lands into the JV, and NANA has the ability to earn either a direct interest in any mines that are developed or a net profit interest, and they only have to make that decision at the time that we make an investment decision. If they take a net profit interest, they get 15% of the net profits of the mine, subject to the recovery of our total capital spent and a 9% rate of return. So what NANA brings to the table is a rich development history in the state of Alaska. They represent the community in the northwest part of the state, totaling 14,000 shareholders. They have a rich mining history. They actually are partners with Teck at the Red Dog mine. Red Dog is the largest zinc mine in the world, and NANA has a net profit interest in that mine. And in many ways, we're modeling the development of the Ambler Mining District on Red Dog, in that we're partnering up with NANA and also looking at a development relationship with ADA, which built the road and the port to Cavallina to allow Red Dog to be able to ship concentrate. Instead of going towards Cavallina, we're actually going inland towards the Dalton Highway, and I'll speak to the development phase of the road with ADA in just a minute. Having NANA at the table is very helpful. Obviously, they have a direct economic interest. They also have the ability to have employment opportunities for their shareholders, taxes that will be paid into their community, and procurement opportunities. One of the key considerations for NANA and members of the community are going to be maintaining and sustaining their subsistent hunting and fishing lifestyles. And that's a big focus on how we look at development, not just of the mines, but also of the infrastructure that's going to allow us to be able to ultimately develop the mines. So we're very fortunate to have NANA as a partner in the development of the Ambler Mining District. Our third development partner is ADA, and ADA is the development agency in the state of Alaska, and they're charged with moving infrastructure development forward to allow for future development. And what we're talking about is a 211-mile road that will connect the Ambler Mining District to existing infrastructure. As you can see on this slide, the Dalton Highway is an existing road that runs through the state of Alaska, and the idea will be to build the proposed Ambler Access Road to connect to the Dalton Highway. And then in Fairbanks, there is a rail link that would allow us to transfer concentrate from there to Anchorage, where there's an existing deep sea port that operates 365 days of a year. So this road has been talked about for a long time, but we've seen a tremendous movement in the last year or so. And there was a long process to get us to a permitting decision. That permitting decision was granted in July of last year when a record of decision was issued in a 404 permit. That now puts us in a position where we can move to the next phase of development. There have been two very important announcements that have come out in January of this year. One was a right-of-way negotiations with the BLM and National Park Service, which were concluded in early January. And the second was an agreement between Ambler Metals, which is a JV owned by South 32 and Trilogy, and ADA to fund the detailed engineering of a road. And that agreement calls for an expenditure of up to $70 million on detailed engineering over the next several years, with each partner contributing $35 million towards the development of that. And we'll be working with ADA in terms of the next phases, which will be the financing for the road, where we will pay tolls to ADA once we have a tolling agreement negotiated with them, and then ultimately moving into the construction phase, which is slated to begin once the permitting for the Arctic mine process has been completed. And I'll speak a little bit more about the permitting timelines when I speak about Arctic. This is where the road is expected to travel. You can see that it basically cuts through all of those red dots, squares, and stars there that are targets that we have within the district. So it puts us in a very good position to allow us to be able to use the road to develop those opportunities there. The road will be initially, it will be what will be termed a pioneer road, and then it will evolve into a single lane road with pullouts, and then ultimately a double lane road. It will be hard packed gravel that will allow us to operate throughout the year, and it will be a private industrial use road only. And that comes back to my earlier comments about the importance of sustaining subsistent hunting and fishing in the district as it pertains to the native communities that are adjacent both to the road and to the proposed mines. This is what Arctic looks like. This is the resource there, 43.4 million tons. As I said, very high grade, 4.2% copper equivalent. This is a great asset. This is what the feasibility study looks like. Basically, the top part of the slide hasn't really changed from a pre-feas that we did in 2018, and that's because our exploration focus has been on Bornite and not necessarily at Arctic in the last few years. So we expect to see that mine life increase as we continue to conduct exploration in the district, including 14,600 meters that are planned for this year when we start our field season in May. You can see the capital cost, $905 million, additional capital, which would be the closure costs associated with the mine, and other capital, sustaining capital, take the total capital up to $1.2 billion, NPV $1.1 billion, cash cost net of credits 32 cents, IRR is 27%. If you look at this in the context of a current spot market, in fact, these spot prices are moving. Anyone who's following copper will know that today it traded upwards of around $4.20. But if you use the current spot prices for all of the metals that would be produced at Arctic, you actually get a $2.2 billion valuation on a 100% basis for Arctic, with an IRR of a smoking 40% on an after-tax basis. So obviously there's lots of good metal exposure here in terms of upside associated with the metals that would be produced at Arctic, including obviously not just copper and zinc, but gold and silver and lead. We would be producing 3 concentrates of copper con, zinc con, and precious metals con. And in fact, this mine produces somewhere around 80,000 ounces of gold and silver on a combined converted basis, which on a percentage basis, the percentages of revenue here are based on the base case, but on current spot prices, that would give us roughly 20% of precious metals exposure, which gives us lots of flexibility when we look at funding opportunities associated with the capital required to build this great asset. I mentioned the permitting process for the mine. This is what the proposed mine looks like. Open pit to the right, tailings facility up top, infrastructure in the valley. This is the permitting process that we expect to begin later this year. And where we're at is we're in a very good position from a permitting point of view. We had a permitting team in place that was transferred to Ambler Metals, and they're in the process of revisiting water management and tailings storage components, with the idea that we would launch a permitting process sometime in the summer of this year. And when we look at permitting in the state of Alaska, you're looking at somewhere between 30 and 36 months. So that puts us in a position to be in a position to start construction or make an investment decision to move forward by the end of 2023, possibly mid 2024. The key permits that are required are mostly state permits. The significant ones are listed here. There's no federal lands that we need to cross. We require a 404 wetland permit. That's most significant permit from a federal perspective. Everything else is really from the state point of view. We've got great state support, and we'll be starting this permitting process, as I said, in the middle part of this year. In terms of exploration, this is where it really does get exciting. There are a lot of exploration opportunities in the district. You can see a number of the targets that we've identified here based on historic resources: Horse Creek, Sunshine, Shunak, BT. If you take the total historic resources there, that's roughly 34 million tons. So if you compare that to 43.4 million tons at Arctic, that's probably about another 10 years of mine life. Now, the key, of course, is determining whether we're able to convert those resources into economic resources that can be processed through the Arctic mill. And that's part of what we'll be doing from an exploration perspective going forward. So we believe there's lots of opportunity to extend mine life at Arctic beyond the 12 years that we're forecasting initially. Bornite is something we don't talk a lot about, but we should be talking a lot more about it because it's 180 million tons at roughly a 1.5% copper. So there's lots of opportunities in terms of Bornite development opportunities. And we're thinking a lot about how we look at exploration in and around Bornite going forward, and looking at how we see Bornite figuring into ultimate development opportunities within the district. This is a Vtem survey that we ran in 2019, and you can see it sort of lit up like a Christmas tree. All of those red dots are targets, and they're first priority targets, and then the yellow ones are second priority targets. So we're obviously in the process of thinking about where we want to focus, and Sunshine is one of the areas that we'll be looking at this year as part of our drill campaign. When we look at this, and when we look at Arctic and we compare it to other deposits in the world, this is a volcanic massive sulphide deposit, and it compares very, very favorably to deposits like VMS deposits in Flim Flon, Noranda, where we've seen mine lives that have extended multi-decades. In the case of Flim Flon, 75 years. In the case of Noranda, 85 years. So we think there's significant potential between Ambler and Bornite to have multi-decade mine production in the district. In terms of upcoming catalysts in the story, well, we're obviously seeing catalysts in terms of the copper price. Copper's had a great run this year, and it certainly looks like it wants to take out the highs that we had in 2011. But in addition to that, we hope to have the optimization of a feasibility study completed during the first half of this year. We're going to have our drill program, which, as I mentioned, is a $27 million campaign, which is focused on the study work, but also on 14,600 meters of drilling that we'll be conducting at Arctic and other deposits in and around Arctic. And then we expect to commence the permitting of the Arctic project. We'll also be coming out with a budget update with respect to the money that we'll be spending on the Ambler access road, and we expect to come up with that update sometime in March, and that will be the Ambler Metals share of expenditure associated with the road. So with that, I'm very happy to wrap up this quick presentation and open it up for any questions that either Amvest or any of the listeners have. And I very much thank you for your time and attention. Thank you.
Great, thank you. And thank you everyone for sending in your questions. Let's start with, first of all, congratulations on the process so far. Really appreciate all the hard work and all that nice stuff. Question in a bit forward-looking. Do you feel the ultimate outcome of all Trilogy's efforts is the sale of the company to South 32 or other appropriate suitor, or for the current management to stay the course into production? And in terms of new mining project acquisitions, is there a typical point in the entire discovery through production timeline where it makes the most sense for a potential buyer to act? And again, very appreciative of all the great work you've been doing to date.
Yeah, those are great questions. Those are the type of questions I get at the boardroom all the time in terms of what we're thinking about. We're very comfortable with the partnership that we have with South 32, and it just really has started last year when we formed the JV. So the great thing about the position that we're in is that we're not cash constrained. We've got $140 million still in the JV, which gives us lots of opportunities to continue to drill out the resource, not just at Arctic, but in the district as a whole, and really come up with the development plan. So we're not constrained in terms of capital that we can put into the project. And so I think our first order of business is to really look at the exploration potential within the district and the opportunities that are there. And I think, as I indicated, when you look at Arctic on spot prices, $2.2 billion, maybe that's not the right way of looking at it, maybe it is, but that's 100% number. That encompasses South 32 and Nana's stake in that. But I think it just underscores the significant undervaluation of our share price right now relative to just the Arctic valuation before you factor in something like Bornite. And there's also a scarcity factor associated with these type of deposits. There are not very many deposits out there that have the types of grades that we have. I was very fortunate that I was associated with Ivanhoe and Kamoa-Kakula, which is going to be the next great copper mine that's going to be coming into production later this year in July. And when I look at Arctic and I look at the opportunities at Bornite, I see lots of similarities. We brought in a fellow called Dr. David Broughton. Dr. Broughton worked at Kamoa-Kakula. He was a co-discoverer of Kamoa-Kakula, and we're working with David to think about how Bornite was created and where the best opportunities are to look at additional drilling and see what we can find. And I would highlight for the people on the call that in 2011, when this asset was still in Nova Gold, and buried somewhere in the Nova Gold website is a press release that indicated that we drilled 12% copper at Bornite. So when we think about the opportunities and the potential sale of a company, I think there's a lot of value that we could add at the Trilogy level, and that's what we're really focused on. And the great thing is that we're all cashed up at the asset level. In terms of the right time to look at things, look, the copper price is really going like gangbusters now, and we know that there's a scarcity factor of these kind of deposits, and our job as management is to make sure that people appreciate what we have in Arctic and what we have in the district, and we just continue to execute, not just in terms of development of a road, but in development of moving the asset forward from a permitting perspective. So that's what the focus will be, and we think the rest of it will take care of itself.
sure you get a lot of questions about the road. Is the road permitting 100% completed? What is the status of the public commentary period? If the road permitting is not finalized, then what's the remaining process, timeline, and risks?
Sure, and the permitting has been completed in the sense that the record of decision was received in July of last year, the 23rd, and as I indicated, the right-of-ways have been received, and now we're moving into detailed engineering. As soon as the permit was received, the record of decision was received, a lawsuit was filed against the process that the BLM followed in terms of issuing the permit, and a second lawsuit was subsequently filed as well, basically arguing the same thing with different plaintiffs. And those lawsuits have been aggregated, and there's a process that will be unfolding shortly in terms of really assessing the merits of the questions that have been raised. Ambler Metals, ADA, the state of Alaska have all sought intervener status with respect to those lawsuits. We don't think it really impacts our timeline at all because it's something that's got to play itself out. And to be quite honest, it's not unusual to see legal action come up during the permitting process. I think any project in the state of Alaska that has gone forward has seen that. I think what holds us in really good stead is we've got great partners, not just in ADA, but in NANA. NANA has a net, is going to be a net beneficiary financially in terms of a development. It's obviously incumbent upon us to make sure we're responsible mine developers and we're thinking about the subsistence hunting and fishing and the social considerations within the district. But we think we're in a really great position. We also know that the types of metals that we're producing, copper, zinc, potentially cobalt at some point in the future, are very important to the current administration in terms of its plans for electrification of the grid, infrastructure spending, and we think that that dovetails well. And this is the highest grade deposit that's probably out there in the US. And if you're thinking about it from an environmentally friendly perspective, we're going to move the least amount of material to mine the most amount of copper because we're the highest grade deposit in the US. And I think that's a key consideration everyone should factor into. So those are the risks that are inherent in the process, but the permits, as I indicated, have all been received at this point.
Still on the road, thoughts on how it will be financed, who will be providing the capital, key risks to road financing, and potential negative impact on Trilogy?
Well, the plan has been very well set out, and I encourage anyone on this call that's interested to go to the ADA website. There's a tremendous amount of information on obviously not just the permitting process, but the economic issues associated with the road. Also really commenting on how the road is going to be paid for. And the idea is that this is very much modeled on what happened at Red Dog, where ADA would fund the development of a road, and there would be a tolling agreement that would be entered into with the users of that road, of which we will be one, but there could be other users because there are other companies that are looking at exploration opportunities in the district. And there's two other deposits at bookends of our deposits. One is called Sun and the other called Smucker, that are owned by other companies. And when ADA was looking at the economic considerations within the district, they looked at four mines. They looked at Arctic, Bornite, Sun, and Smucker, and as a basis for the rationale for the development of a road. So we will definitely be paying tolls, and that's to be negotiated with ADA. And once we start this detailed engineering process, we will start those discussions. But I encourage people to go to the ADA website, where there's a tremendous amount of information on the timeline, development of a road, cost and forecasts that have been produced, and really the thought process on the financing.
What upside potential are you getting in the project financials with the increase in the price of copper? Do you think your share price was responsive enough for the upward trend in the copper price?
Yeah, the answer to that is no. We haven't. I don't think we've responded enough relative to where the copper price is, but we get it. We don't have an asset that's in production right now. It's probably going to be in production somewhere around the end of 27 to 2028. If you just sort of, add all of the pieces together in terms of permitting timelines and then construction of a road and construction of a mine. But what we think obviously is that we've got a great deposit, and we think we're in a strong position to be able to see this to fruition. We've got a feasibility study at a Trilogy level. And I don't think that people are looking at the scarcity factor associated with copper and valuing companies like ourselves on the appropriate metrics. And one of the things that's hurt us for sure is that we didn't have a field season last year because of COVID. And as a result, we didn't have any drill results that came out from the district. We're going to make up for that this year by having our drill season from May to September, maybe a little longer, 14,600 meters, as I said earlier. And we hope to get some good results to obviously just highlight the tremendous potential in the district. And I think that's really the important consideration that people need to look at. It's not just about Arctic as a 12-year mine life, it's about the ability to extend the mine life at Arctic significantly beyond 12 years. And it's about the development potential of Bornite and any other discoveries that we can make in the district. So we've only just begun to scratch the surface of exploration potential in the district. And we think that as we get going with our team at Trilogy, the team at Ambler Metals, and the South 32 team, we're going to have an embarrassment of riches in terms of opportunities from a development perspective in the future.
Okay, thank you. Stu?
Thanks for the presentation, Tony. So just on the economics, what metals is the project economics most sensitive to? And, what impacts NPV most positively, improved copper price or gold or?
Yeah, it's that's a great question. And when we issued the feasibility study in August of last year, we had a sensitivity table attached to the presentation. It's on our website, which highlights all of the sensitivities associated with not just the metals, but production costs and capital costs, et cetera. But definitely copper is the biggest exposure. This is a copper mine, but there's a lot of gold that's going to be produced there as well. And it's interesting, when we were looking at it earlier, before the copper price moved up, when we just looked at the increase in the NPV of a project as a result of changes in the gold price, they were quite substantial. And that's the beauty of this deposit, is you've got that gold component there, and you get you get copper and zinc and silver. So we've done a bunch of internal assessments, and we sort of looked at this as a gold mine. If we said it was a gold mine, it would produce, depending on the base case numbers, somewhere around 650,000 ounces of gold. If you looked at it on spot, it's probably more like 450. As a copper mine, we've got 155 million pounds a year of copper, but then, that's before all of the other credits. So this is a copper mine by and large, but we've got the benefit of all of these other metals, and that's really what drives it. Even if copper prices went lower, back below $3, this is an economic opportunity and development opportunity. And I think the real ability for us to add value is extending mine life beyond 12 years. We'd like to obviously be in a 20+ time period with respect to mine life. And Stuart, as you know, when you look at MPVs and you're using an 8% discount, by year 10, you're not getting a whole lot of value associated with year 11 and 12. So we know even if we add another 8 to 10 years of mine life, it's not really necessarily going to translate into a material change in MPV or IRR because of the discount rate. But we do believe that there's lots of upside. But to answer your question, it's a copper mine. Biggest exposure is copper. That's the biggest upside. That's the biggest downside in terms of impacting MPVs and IRRs.
Yeah, gotcha. Thanks for that. And then when going to thinking development, where would you be locating the plant at site? And are you thinking you would have a central plant where you can feed, ore from Arctic and then Bornite down the track once you've proved it up?
I think that a lot of a focus has really been on Arctic specific, and one of the things that we're revisiting right now. So when I say we, I'm talking about Ambler Metals, and we're very fortunate. We hired a fellow called Ramsey Faraz. He was a senior VP at Newmont, and we've hired him as the CEO of Ambler Metals. And he's really revisiting all the work that Trilogy did on the feasibility study, and they're reassessing the location of a plant. And it's in that slide in the presentation where I showed it in the valley. And I think they're confirming that that's the logical location. The tailings facility is logical, and where and an open pit as opposed to underground makes the most sense. We're starting to, on a Trilogy basis, I can certainly tell you we're starting to think a lot about Bornite and how Bornite could be factored into the development of or the longer term life of Arctic. But it's very conceptual at this point, and we think we would have to look at the circuit at Arctic to incorporate the production of really just a copper plus possible recovery of cobalt. But we think there's a huge upside considering that, you know, there's 150 million tons of 1.5% copper material located at Bornite. It is possible that Bornite will just be a standalone operation and it won't necessarily be fed through the Arctic mill. I think a lot of that depends on whether we're able to find other high-grade material in and around Arctic that has a higher value than the Bornite material. And this, you know, comes down to the embarrassment of riches that I believe that we have in the district.
Yeah, thank you. And as a, you know, how much interest would Bornite be to the, you know, the JV in South 32? I'm sure it's come up in discussions in the past.
So it's all part of the district. So Bornite sits within the area of interest. And what's interesting is we didn't pull it up on the slides, but in the presentation there's some slides on Bornite which show the drill campaign that we did. And South 32 has invested about $200 million in Trilogy and the Ambler Mining District, $145 million in cash to get the JV interest. They also spent $30 million on exploration and they own 11% of Trilogy. The $30 million that they spent on exploration in 17, 18, and 19 was all focused on Bornite. And I'm not speaking out of school here, I'm just telling you the reality, which is that when South 32 made the investment, they actually made it on the back of Bornite and wanting to really look at Bornite. It was only when Trilogy came out with the feasibility study on Arctic in 2018 that we showed the robust economics with Arctic, that the focus shifted to Arctic. That's why I say when people look at our story, yes, they talk a lot about Arctic being a great project, but they lose sight of the fact that the original investment thesis for South 32 was Bornite. And so Bornite's going to get developed. It's just a question of where it fits in the queue and how we allocate capital. And you know, the decisions that you always have to make in terms of processing the richest ore first and how it figures in from a development perspective. So that's how we're looking at it.
Yeah, and on the VMS, how well is your understanding of like the camp theory and the clusters, and has the recent Vtem survey concluded across Bornite to help identify more prospects?
We're still learning a lot more. What's really interesting is that we have, you know, our team, we've got a couple of geologists, including David Broughton and Richard Goss, who's another ex-Ivanhoe refugee that's working with us. And what we're doing is we're going back through a lot of data, and there is an embarrassment of riches in terms of data. This was explored by Kennecott in the 60s, and the only reason it hasn't been developed is because it was always about access into the district. And so that's why this road is so pivotal to the development of the district. And so what we're looking at is a lot of the information that, you know, was provided by Kennecott in the past. And we're finding stuff just through some of the due diligence that we're doing now that we hadn't been aware of, which I think will give us more opportunities in terms of looking in and around Bornite and some of the other targets. So the Vtem survey is helpful in obviously identifying targets. If you look in the presentation past the last slide that I put up, there's a couple of slides that show what Arctic and some of the other deposits look like when they pop up on the Vtem survey. So I think, you know, we are able to demonstrate that Vtem survey is identifying anomalies that should be drilled. And our biggest challenge is the drill season is short in Alaska, and we've got to judiciously pick the targets that we're very focused on. That's why it was such a shame that we weren't able to have a field season last year, which was, by the way, the right decision in the face of COVID and safety for everyone. But that's why we're really chomping at the bit to get back into the field and conduct exploration this year. So we think the Vtem survey is helpful, but we know that we're still getting a good understanding of the prospectivity of the district. And it is very much a district.
Gotcha. Just one last question from me before I pass to Gabe. Of the 14,000 meters planned exploration drilling this year, how much is between Bornite versus at Arctic?
So we haven't made any specific decision. So it's going to be 7,600 meters at Arctic, and then the other 7,000, we haven't decided where it's going to go. Originally, it was going to be mostly focused at Sunshine and some of the other targets. And we're still considering whether we do anything at Bornite, but we haven't made any decisions at this point. We think a lot of our work at Bornite this year is going to be soil samples and geochem work, sort of pushing further from where we've done drilling in the past, which will set us up next year to look at potential drilling. But that's a discussion that's being had right now between our geologists, South 32 and Ambler Metals in terms of focus. And one of the challenges that we still have with COVID is even if we wanted to get more people on site, we have to be very, very mindful of just the distancing that you have to have and the safety protocols. And so that's a big focus for us. And we're not in a position to be able to expand the camp significantly. So we're somewhat constrained in terms of the amount of work that we're going to be able to do, but we do want to set ourselves up to look at future drilling at Bornite. So 7,600 at Arctic, 7,000 elsewhere. The 7,600 at Arctic is also going to encompass geotech work as well and metallurgical work. And so we'll be using those samples for those purposes as well.
Yeah, thanks. Sorry, I do have one more question. How well is your understanding of like the metallurgical differences between the two Ambler and Bornite sequences?
They're totally different.
Yeah.
Yeah, totally different. If Pat was on the line, he could give you the geological verbiage because it would come right off. But Arctic is very much a VMS type deposit, and Bornite is totally different. In fact, Bornite is more of a Kipushi type deposit, and that's why my good friend Dr. Broughton is so important to the mix, because he would cut his teeth on the African copper belt, and Kipushi and Kamoa-Kakula were his specialty. So that's why we're excited to have David working with us in terms of looking at exploration in the district.
I'm here, Tony.
Oh, well then chime in.
Yeah, I mean, what's really interesting about Arctic and Bornite, metallurgically they're different, geologically they're different, but what's really intriguing is they're the same age. They're both Devonian, and what that means is, we suspect that they could be part of the same system. And again, that talks about this district-wide potential. So Tony mentioned we're looking at this summer program, and one thing we've been discussing is are there any targets in the Ambler lowlands between Arctic and Bornite? So we're blessed with just an absolute plethora of targets because again, this is a really long district. It's over 100 kilometers long, and there's dozens of showings, prospects, mineralized drill holes, historical resources, and that's what's really exciting and why South 32 likes the story. And we're working right now really hard on come up with some targets because we got lots of areas that we like to explore.
All right, thanks. Pat, Gabe.
Thanks. One of my questions was about sort of the strategic angle of this all in terms of the length of mining that could be done here. So I assume we'll get some clarity around new targets or new economic intercepts, hopefully, with the coming program. That's part of the plan?
Yeah, that's definitely part of a plan, and I think as I said, the economics that we've put out are Trilogy economics. South 32 hasn't really opined on the feasibility study. What's interesting is that the engineering firms that we used, Docenco, SRK, and Woods, were the same firms we used for the PFS, and they're the same firms that Ambler Metals is using in terms of the supplemental study work. So the expectation is more study work with respect to water management, tailings, revisiting the infrastructure, looking at all of those things, puts us in a position to start the permitting process, continue to drill want to obviously get to a mineral inventory if we can of, somewhere in that 20-year mine life perspective. We've got basically 3 or 4 years to get ourselves there. But if you look at it, even on the basis of the numbers that we put out today, and I recognize that people don't use spot prices to justify investment decisions, but they do run it at spot to understand what the upside is. We've got a really viable project here. Plus, we've got the ability of exploration potential in the district. So we think it's a great story in terms of where we're going. And I think the two other factors that I mentioned earlier is we're funded at the JV level for the next 4 years, possibly 5. At the corporate level, we're sitting at 11 million in cash, which probably is enough for the next couple of years. And the stock hasn't performed as some of the other copper stocks have gone. Sure, we just traded a 52-week high, but if you look at where the stock is trading right now, it's actually trading lower than when we released or when the record of decision came out on the road. So we traded up in Canadian dollar terms at that point. In US dollar terms, I think that was also our high before we just took out the high. But essentially, we haven't really seen anything priced in for this copper move. And if you go back to last July, I think copper was probably sitting somewhere around $283. So we've seen a $1.20 move in the copper price, and yet our share price is pretty much flat. And I think we attribute that to the issue that I mentioned earlier, no drill results, no information out there as far as the program. And that's why this program this year, Gabe, is going to be really important.
Yeah, and getting back to that sort of 20-year mine life mineral inventory target, what's the deepest portion of the open pit that you put into the 2020 feasibility study, and do you have any economic intercepts below that design pit level?
I don't know the deepest area. Pat, if you know, please chime in. There's an additional 3.5 million tons of inferred material that hasn't been incorporated into the mine plan. And I think one of the things that will likely happen this year is with the additional drilling that we'll be doing as far as drilling for metallurgical purposes, we hope to possibly be able to increase the resource at Arctic as a result of that. But Pat, if you have any details on the how
yeah, I would, Tony, can you flip to slide 36? I think that would answer the question.
36, all right.
That's a cross section of the Arctic deposit, and you can see the pit outline. 36, it's in the appendices.
Yep.
Lots of slides.
Did I just pass it there? Was that the slide?
No, keep going. You're good. Keep going. No, you're going the wrong way.
No, 36.
34,
right
35. There we go.
Okay.
So, we were there. There we go.
We're here.
So what this is here is a cross section of the pit. We're looking north, and you can see the lenses there of mineralization at Arctic. And so the question was how deep. I believe the deepest hole is there around 300 meters. And is there mineralization under the pit? You can see here, it doesn't look like it, but you can see they do extend. Mineralization does extend to the east. And as Tony mentioned, there's another 3 million tons of inferred, and I believe that's underground. So what are the, this summer, some of the drilling could be used, and we haven't finalized this, but we're looking at this, that some of the drilling could be used to define additional mineral resources around the Arctic pit, whether it's underground mineralization or more open pit material. So, but it is still open, but we're still working on this.
Okay,
So
thank you. Yeah, thank you. And so I see here the strip 6.87 to 1 in terms of the overburden, sort of the pre-production strip. How much time is contemplated for that?
Yeah, so the idea is that let's assume that we're in 2024 when we're in a position to make the investment decision. That's also when road construction will begin, and the idea would be to get a pioneer road in as quick as possible so that we can move materials and supplies in there quickly. We're also looking at the possibility of bringing equipment up on through the Kobuk River, and we've looked at some opportunities to be able to transport some heavy equipment there, and it certainly seems viable. And the thought process on our side is that we should be able to get some equipment into Arctic that will put us in a position to start the strip and at least be in a position where we protect ourselves against inclement weather in the district. So the idea would be to get equipment in there as soon as possible, start the pre-strip, the road construction would begin, and then we would start the construction of the mine, which will put us into that late 27, 28 time period, assuming everything goes according to plan.
Got it. And just one last question. How is equipment moving in there today?
Well, there's been equipment that's been flown in the past, and it's really just we have the dozers there and we have drills there. And then the camp was built a number of years ago, and it's a fly-in, fly-out operation, right? And so and we use as much local labor as we can. So one of the keys for us is to get as many of the NANA shareholders in the communities working there. And, that was definitely a hardship last year because we weren't able to have a field season. Those jobs just weren't there. So, that's another reason why we want to get back in there this year and create some employment opportunities in the district and, set ourselves up to move forward. And, we think that that's going to be one of the great benefits of not just our development, but the development of a road and the district, and other potential there is really the employment opportunities that hopefully will be created in the northwest part of the state. And they have a rich mining history. They have lots of experience having people that have worked at Red Dog. And, I think we'll be looking at training programs that will be key to make sure we've got a strong workforce coming from the native communities in and around the mine and in the northwest part of the state.
Great. Actually, just one last one before I pass it to Campbell, because you mentioned about NANA. It just came to mind. Does that agreement have an end date, and do they own any portion of the project?
Yeah, so it's a 20-year agreement, I believe, plus there's an extension period that goes. There's an option to extend on our part. And the way the agreement works is, as I mentioned, they can choose a net profit interest, and the net profit interest is tax deductible. It starts to be paid when we've recovered our capital plus a 9% rate of return. So obviously, the higher the commodity prices, the quicker we recover our capital, quicker we get that 9% return, the quicker they start to get the net profit interest. Or they can make the decision to take a direct interest in the mine. If they take a direct interest, it's between 15 and 25%, but they have to pay their share of capital, plus they have to pay sunk capital with a bit of an adjustment. Now, we don't know what they're going to do. They obviously have that option, and they'll have to make a decision as to what their thoughts are when we make the investment decision. What we can say is that with respect to tech, they have a net profit interest. And so our thought is that that's probably the most likely outcome, just given that, do they want to be in a situation where they actually have to put capital up to earn a return, which could be better, but it also could go the other way. They also have a royalty that was signed as part of the original deal, so they have additional opportunities for revenue in that regard. But we think the agreement, obviously contemplates, gives us enough time, not just for the development of the mine, but obviously with the extension, future developments in the district.
Got it. And just small comment, if you don't mind, just for those that don't know, is NANA very well funded? Do they have a strong balance sheet, or?
They're very well funded, but they have 14,000 shareholders that depend on NANA. So the Northwest Arctic Borough has there's 14,000 NANA shareholders there. NANA is the corporation, the borough is the area, And so there's 14,000 individuals that effectively are dependent on payments and dividends that are paid through NANA. And NANA has a diverse business interests, but certainly Red Dog is a large contributor of cash flow to the community. And we would see Arctic being a very significant contributor of cash flow to NANA and the community. So they're well funded, but they've got a lot of people to look after as well. And they need jobs. They need jobs. They need training. They need investment in the area. That's really important, and that's part and parcel of this. And that's why when we get asked a question about support, we know that the folks in the community are behind us. They're concerned about the road. They're concerned about subsistent hunting and fishing, but they're also very, very aware that that these will be good jobs and good opportunities, and that there'll be a good environmental stewardship of their lands, and that's going to be key for us as we operate in the Ambler Mining District.
Great, thank you very much, Campbell.
Can you talk about potential hypothetical interests in Trilogy from other strategic producers like BHP or Rio or South 32, whatever? What would be the catalyst for potential target acquisition from South 32 or other potential acquirers? I guess what are the different game theories and plan out there?
I think it's like most things, this is there's a scarcity factor associated with these kind of opportunities. So we've got a great deposit. It's Arctic is one of them. Bornite is another. We believe there's hopefully some other Arctics to be uncovered there. Bornite has potential to be much larger. As I mentioned earlier, 12% copper drill holes in 2011. That's Kamoa-Kakula type grades, by the way. So we think that there's a lot of upside in the district. We've got a great land position. We've only started to scratch the surface of it. It happens to be in the US, which is really important. It happens to be in a state where there's a rich mining history, strong skills, good infrastructure. Yeah, we have to build this road to be able to get to the district, but there's already the Dalton Highway is already there. There's a rail link from Fairbanks to to Anchorage. There's a deep sea port that's already operating 365 days a year. So we think that there's a lot of companies that could potentially be interested. And our job as Trilogy management is to really make sure that people have a full understanding of what we're talking about. And I think when you look at this asset and you compare it to other development assets out there, it strikes me there's a few things that are really working in our favor. One is we're well funded, certainly up until 2024 or 25. Got a great partner in South 32, which is really going to be important as we move this thing forward. Got great support from NANA and the state of Alaska through ADA. And we've got this incredibly large land position. And then we're sitting on high grade, which is hard to come by today when you look at the declining grades that are really symbolic of most mines. I know now people start to talk about copper equivalent grades at some mines, and they get all excited about 1% copper. Well, we're 4.5 times that on what we have right now at Arctic. So we think that there'll be a lot of people interested in, and particularly as we continue to sort of tick the box on all of the things that need to be done, which we're doing slowly, and that's why we're in no rush to, we're trying to unlock value, but we're really focused on continuing to keep our head down and moving the project forward. And the last thing that I would say is that South 32, not only have they done us a great favor by, obviously investing $200 million in Trilogy in the district, but they've also done the due diligence in the sense that they've conducted significant amounts of due diligence in the district and on Trilogy and on the assets. So I think we feel very comfortable that we've gotten the South 32 seal of approval in terms of, making the initial investment and coming into this asset. Which I think is important just to underscore that this isn't just something that might come together, that obviously the the 43.4 million tons that we've identified at Arctic is real.
Thank you. That essentially is a very good closing statement. We've reached the top of our hour and want to thank everyone for tuning in and for your questions. You can still send in some more questions and we'll get them over to Trilogy's office. So we'll be queuing you for feedback. Please share the feedback. It will also make itself to its way to Trilogy, and it's really much appreciated. So with that, I'll give it to you and Pat to close.
Campbell, once again, I really do want to thank Amvest for hosting us in the webinar. And thanks everyone for joining us. We've got a great story here, high-grade copper in the great state of Alaska, Trilogy Metals, TMQ, New York and Toronto. Please visit our website, trilogymetals.com. Thanks for your time and interest in the story, and look forward to providing future updates. Thanks again.
Great. Thank you, gentlemen.
Thank you.
Good day.